Today, I'm going to tell you the story of Isaac. With $140,000, he pushed it up to a couple million using one system, one strategy, and graduating through these 4 principles I'm going to unlock today. Most people were in the same boat as Isaac, day trading, losing money, putting their financials at risk on a weekly basis with the wrong systems. So if you can build the right game plan, where could you be in a year? Where could you be in 10 years? Because if Isaac could be a multimillionaire, could you be that too? That's kind of my whole goal of this video, is to outline how to even give yourself momentum. Give yourself consistency, something you can put in the markets and rely on and hopefully get income to come in on a monthly basis at least. That's the first step. So here's what we told Isaac. The first lesson, start with the right stock, because most people, they're not going to make money. And it's not because the strategy, it's not because the market conditions, it's not because your entry sucks. It's literally just the stock. And I hate to make it sound that simple, but it decides everything. Because if you in the past 2 years just bought and hold Nvidia, you'd be up 1,000%. So your chance of success was like 100% if you did anything. Let's say you just sold a put option. Let's say you bought a leap option. Let's say you did a credit spread. If anything you chose, you turned it to gold if you had Nvidia. But if you had Rivian, it's the greatest example. This stock has fallen from like $100 to $1. Over the past 2 years, this stock has fell every single month like clockwork. So the chance of success was 0%, literally no chance of succeeding if you did the strategies we're going to outline. So again, the strategies don't really make you a winner. The stock at the end of the day will, but then viewing how to play it is the next step. So stocks are key. Here's 3 quick things to check. Make sure you're choosing the right stock. I like large companies. Large companies are winners, right? They've been around for a while. They've proven themselves. They've probably gone up for multiple decades. So it's safe to say they can continue to go up, right? So a large company really creates this safety net around an investment or a strategy. The next thing I've found is technology-based stocks, because choosing a stock is number one, but figuring out if it can go up next year and the year after that is really based off a thesis, a reason the markets can push it. For example, Target, there's not really a big market for Target in the future. It's pretty much the same market today. And the markets are pretty efficient pricing stuff in. So they know targets aren't going to change in the next 5 to 10 years. There's no massive opportunity for Target. One thing the markets don't price in and can't price in is where technology is going to be. Literally tomorrow, AI can create a service, can create a market that completely shifts everything. So there's this X factor with technology that makes it the number one sector to start using the system in. And lastly, implied volatility is going to be the game changer for everything I'm going to teach you next. So some stocks have too low of implied volatility, like Apple, and some stocks have higher, like Nvidia. 50% is what I deem the bottom. And then from there, the bigger the better. At some point, it becomes too high. Over 100% is too much. But when we teach you the strategies in this video, you're going to make more income for option selling with higher IV. You're going to have more upside from buying options with high IV. So high IV is actually the game changer for everything in the markets. So these 3 core metrics held Isaac back because he wasn't following them, but also helped Isaac succeed when he started to align himself. Because we spent the first 3-4 months, looking at Celsius. And I told Isaac it was not my favorite stock. It wasn't a good trend. It didn't have a great upside in the future, a good thesis to put yourself behind. But he still wanted to try it. So I said, okay, do the wheel. Let me know in a couple months what you're thinking. Didn't work out. Again, obviously it wasn't a strong stock and nothing changed. So he switched to Iron. And Iron was life-changing money at that moment. If you got into it, you would have crushed it. And that's the difference. Iron had technology, had implied volatility. It wasn't necessarily a large company, but that is just, again, something he can use, something he can do in the future if he wants. This is not a Bible to follow, but this is the best way to structure your money to make money. You don't need everything to follow this and be successful. You just really need most of it. So Iron was following most of that stock picking opportunity that we talked about, and that's why he set himself up for the biggest moves. Because once we switched to Iron around the bottom of the markets, we started selling puts on that, just like we teach all the students. The first thing when you have a stock you like is to start creating income, and then you kind of graduate from there. But the reason we start with selling puts is because it doesn't require a stop loss. At the end of the day, every student I've seen in the past 10 years of running this business always struggles around stop loss management. If there's one flaw behind every trader in the world, it's who can take a stop loss quickly. Who can know when to take a stop loss? Who can plan it? If you don't have that management, that vision, and that execution, you can ruin your whole account. And it sets you back. It delays your success. So the stop loss idea was really the thing I've had the hardest time coaching people around. That's why what I've found is when you sell a put option, you inherently don't need a stop loss. Because if the trade goes against you, you convert your cash secured put to stock, which kind of avoids this one scenario that people blow up accounts with is I don't take a stop loss. And if you don't take a stop loss when you get assigned, the stock drops for months, who knows? But it doesn't go to zero. For the most part, stocks don't go to zero in a month or two. It might take 12 or 24 months, but you can recognize pretty quick if it's not a good stock, if it's not a good scenario, and hopefully just move on. So even if everything went wrong, this strategy, selling puts, getting assigned, doesn't wreck you. So here's what happened. Isaac started at 130. He was selling puts for income. He got assigned. And this step up allowed him to jump to a 500K in 3 to 4 months. Because once you sell puts, that's really the first step of our system. That's where you start to get consistent. That's where you can start to get around any big losses, really, and start to see consistency in many markets too. And then once you start getting comfortable, you really want to push yourself to get assigned. Getting assigned is, again, you're not going to blow up your account in a month or two from holding a stock, but you put on a little bit more risk, but you get a lot more upside in this scenario. And that's how he was able to almost triple his account in that 3 to 4 month stretch. Because he understood that assignment is a gift at the end of the day. Assignment needs to be incorporated to really push up an account. And as you can see here, that's that first push we saw, using the CSPs and then getting assigned and then holding the stock. But the key is once you get assigned, you really have to have the right mindset, because you can have 100% return, or you can botch it and have a 5% return, or you can even take a loss in some scenarios, and it can really deter you from the big wins. The keys: don't panic. You want to hold the stock and let it run. Those are the 3 concepts. That's it. Not panicking, let the stocks run. And that's where you can have those big months, those big years from assignment. Because once we get assigned, what we want to do is scale out when RSIs become heated. That's the number one way to gauge when to exit the stock move. And if the RSIs are low, which I'll kind of gauge here, one of my favorite plays currently is Ethereum. If the RSIs are low, it just means you have a lot of upside there. So if I go to Ethereum, the RSI is at 30. So if I was to get assigned on this stock, I would never want to exit, would never want to sell a covered call until I get to like 50, 60, 70. That's where it's too much risk, too much upside. And that's where you can get caught in the multi-month, multi-year downtrends. The goal of any assignment is just to avoid a multi-year downtrend and try to maximize a multi-year uptrend. And it's really based off how low the RSI is versus how high it is. And that's where we want to actually manage the other side of the wheel and have a game plan for it. So the last thing I told Isaac to do was right around this moment here, around I think 700K. He took his account from 140 to 700. And honestly, we could have just called it there, ended the year. That's it. We made a lot of money, pay the taxes, move on, do the first basic part of the system, sell puts again, just go back to the basics. Instead of doing that, I told him to put the gas down. I told him to actually push at this moment because of one simple thing. If you have a win streak and you have momentum, you likely are cranking in a good market and you're actually in a good opportunity vehicle. So that's when you want to push towards the leap options. What you don't want to do is buy options when things aren't going good, when you don't understand the dynamics and you haven't been consistent and you haven't made a good 1 to 2 or 3 month return. You never want to buy options when things are going poorly or when you haven't really lit the fire to get things moving. What you want to do is have like 6 months where you've been winning, because likely you understand the stock you've been using. You've been hopefully using one stock for that long. You've hopefully been doing the wheel properly, not hitting any home runs, not hitting any day trades. If you've had success doing the boring stuff, that's when you turn on the other stuff, the leaps. Leap options are my favorite next trade because you don't have to do much. You buy a long-term option. Again, I'll go to my platform here, click leaps. We'll even click iron today. And what you're going to do is buy something 360 days till expiration with a strike price maybe 20% out of the money. And what this allows you to do is passively make thousands of percentages in some markets, maybe 200% in an okay market. But this is something you're not managing, and you're certainly not blowing up accounts. Because let's say you put in 100 grand for this trade. For you to lose 50%, iron would have to crash 30 to 40%, which obviously could happen, but the chance of it doing that in the next 3 to 6 months, usually pretty low if the market's been good. So crashing down here, that's pretty far. But crashing beneath that, it's less likely, which means really you're not blowing up your whole account on a leap. Leap options are still a little protected where you're not seeing an instant loss of 100% or even 80. It's a very slow drip to lose money. And that's why I like going here versus day trading or short-term swing trading with 60-day options or one week option. Who knows? But when you add leaps, you add that still passive income effect, but you also add that massive upside. He didn't put much of his capital in leaps right here, but he 1,000%ed pretty much any capital he did put in. So 100K goes to $1 million, right? I think you get it. He wasn't full porting his whole portfolio in leaps, which was awesome, but he got that upside, which really crushed it. So going through it again, you need to earn the right to do this. You need to make sure you don't overthink it. You don't touch it. You let the good markets push up these leaps for you, and you let them rip. They could go 500 to 1,000%. At the moment, when iron hit these 70 touches, even like the 50s, the RSI was at 80 on the weekly. That's when he should start scaling out. That's when he should start taking profit. And down here, is at the 30s. But we didn't really start buying till honestly this first popped to, I think, 13. 13 was where it started to get in the 60s, I believe. So this momentum was huge. It was astronomical at the time. But the ideal place to buy would be here, honestly. That's where you're going to have 2, 3, 4,000% if you hit, let's say, $4 to 70. It's absolutely nuts if you're able to do that. And the closer and closer and closer you get to 60s, 70s, and 80s, the more the leaps will hurt you. So just be careful. I know it's exciting to see these returns and think that's the path, but it's not. Honestly, the path is starting at the first stage, picking the stock, selling puts, getting assigned, then doing this last. Because you can botch this, but you have to be okay. Any capital you put inside the leaps can go to zero. You have to be okay with that. You don't want to be full porting it. But this is the whole path of what I did with Isaac. Hopefully this makes sense. You start off with the right stock. You put your money in. You sell puts. You get assigned. You do the wheel. You might be hitting 2, 3, 400% in a good year, in a good market. And then you get permission to do the leaps. It's more comfortable to do leaps when you can risk 100K because you're up 600K. So risking your profits is really what I teach students. With leaps, that's where the only time I would do that. So those are the 4 stages of being successful with my system. Hopefully that works. Hopefully that gets you guys in a good place. And hopefully that can get you consistent over all the other garbage on the internet. If you guys want to learn with us, click the link below, fill out an application. We're the #1 coaching program for option selling, but that's really just the bottom. That's really just the first level. We would want to teach you next levels after that, and that's where you can unlock some epic life-changing opportunities. So if you're the right fit, we'll coach you, we'll work with you, we'll give you our software, we'll give you our trades. We'll actually put you inside multiple live streams with 6-figure students who are teaching daily, and they'll be able to help you on your journey too. So peace out, everyone. Good luck in the markets, and we'll talk soon.